that's how the strategy works every single trade, right?
When you sell something, what happens? You bring money in, right?
Stay smart, stay ready, stay profitable.
All right, what is going on, ladies and gentlemen? Welcome to the Profit Panel. The markets are kind of heavily selling off today. Let me unpause the chat for you fine individuals so you guys can all chat away now. Yeah, we're getting a little bit of a heavy sell-off right now. The VWAP, though, is about 40 points away on SPX. So if they really want to take this down, we're going to have to see some serious sells come in at this point. For them to take this down lower. I think 6630 on SPX could be a good level there. What's up, Ezra? Good afternoon. Good to see you, man. Welcome back from vacation. Nice to have you back in the corner battling for us. We appreciate that. Oh, here he is. He's with us already. I don't want to throw him in too soon, though. Alex, if you're ready, you just give me a thumbs up. He's ready. What's up, Alex?
What's up?
Well, you called it last week, man. You said the markets are going down, and so far we've been going down today. Not without some turbulence, but
yeah, yeah, dude, we're down. We're down. This is not. It's not a really pleasant day, is it?
No, not pleasant. I mean, there were some nice moves, I guess, if you were a intraday, trader, but definitely tough.
Yeah, it's weird out there. It's like a whole bunch of, again, like just a whole bunch of volatility here. I'm gonna go ahead and throw up my chart.
Please do.
Let's get right
Jeff.
into it. Oh, crap.
Yeah.
What's up?
Here I am.
What's up, dude? Actually, let me turn on my little light here. Whee! So, been a strange day.
You see where Ford's going to be selling used cars on Amazon?
I did see that. Is Amazon up based on that?
No, they're down.
It's pretty Ford's bullish. Down. Dude, I feel like, is Carvana down?
I didn't check that.
No, Carvana's up. If only it were that simple.
Yeah.
Right.
Oh man. Let's get the screen up here.
Matt says it's backwards day. Every day is backwards day, don't you know?
Yeah. Well, folks. Okay, so look at this. We're heading into. I thought it might be interesting to talk about like psychological positioning for until things change, because I think that everyone has kind of gotten used to easier money, right? I mean, nothing's ever easy, but like when you have everything just soaring on top of its EMAs, what's really interesting. So a few things I want to talk about, and one is Japan, 2 is Netflix split, 3 is psychology positioning for right now with volatility. So let's go ahead and start on volatility. So look at this. So basically since May, volatility has been in a super, super compressed range since like Liberation Day, right? And now it's up. So with volatility, right? You need to be very cautious to playing anything to the upside, especially when there's no real good news to drive stocks. So the big news this week is NVIDIA. Well, really, I feel like a lot's resting on NVIDIA. My viewpoint on NVIDIA, and this is actually going to be sort of a letdown, is I think NVIDIA is going to report good earnings. And I think what's going to mess people up is I think that nobody's going to care. So everybody,
go off the past history of the stocks that we've been seeing, I'll agree with you, because a lot of them had great earnings and they just dump them.
Yeah. So, and I'm talking more about the broad market too. Like,
yeah,
I think everybody's like, okay, well, this is a little bit of a, uneasiness. And then NVIDIA is going to come out. They're going to say they've added another $1 trillion in revenue from CoreWeave. And everything's going to be peachy again. So I think actually that would be great. But I think actually what would be, and then that would be amazing. We're all wishing for that. I don't think it's going to happen. What would be understandable is that NVIDIA says, actually, our sales are slowing down and their earnings are bad. And then the market sells off along with NVIDIA. But I think like if you're thinking through like maybe the Max Payne trade is that NVIDIA is going to have good earnings, but it's like not going to really have a broader market effect. That's what I think, because I think a lot of people, it's like that binary good or bad, up or down for the rest of the market. I don't think it's going to happen.
Well, I think the only thing that would make it be opposite of that is that they came with absolutely blockbuster earnings, smashing everybody's estimates and stuff, which I don't think that's going to happen. But my guess is if they do that, then the market will probably go up. Otherwise, I think you're right. I think they're just going to blow it off and go, thanks.
Yeah. Yeah. So just let's see how it plays out. They're reporting Wednesday night. So we'll see on Thursday if I'm right or if we're right.
Yeah.
But it's I mean, the thing is look, I'll keep up. So hey, CVS, we're actually in a good position, sort of. We sold off a little bit, but like, so if you look at what's actually going up, CVS, LLY, J&J, AbbVie, these are, so pharmaceutical stocks are having a heyday right now, and they are holding up. They're like I don't know if that's flight to safe. I don't know. Our big pharma stock, I mean, J&J is, I guess pharma stocks generally a flight to safe haven status. I don't know, but they're doing good right now. So VK, but more of the smaller ones, Viking Therapeutics, even though it's not too small, that's down a little bit. But NVO here, NVO filled the gap today. So I think we're in actually a good position for NVO, and those are longer dated 19 calls of December. So I'm not too worried about that. I think in NVO is sort of a lagging the other pharmaceutical stocks. If we look at the scanner here, just my little screener, AstraZeneca, AbbVie, J&J, Lilly, Abbott. Look at this. These are all pharma companies. They're all sort of leading the market today, along with KO and PEP. But Amgen, right? Look at that. So, and look at PF Pfizer. So look at these companies. So outside of Google, what don't you see? You don't see Rocket Lab. You don't see Archer. You don't Quant Qubit. You don't see this stuff, right? BMY, Bristol Myers Squibb. So GSK, GlaxoSmith. I mean, look, out of the top 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, about 16. You have like half of them, or almost half of them, are pharmaceutical companies that are leading the way today. So I would say for the rest of the week, let's focus on pharmaceutical companies. Now, I will say, so we opened this trade on NVO last week. NVO did sell off, but NVO, they're discounting Wegovy, dropping the prices on that. Now, I know that could be lower revenues. However, it should increase market share. I think they have Wegovy. It's one of the GLP-1 drugs. Correct me if it's not Wegovy, but you know what I mean. It's like the obesity drugs. So just heading into this week, focus on these tickers, on the pharma companies, because they're up while the market is kind of selling off today. So that's a pretty good sign. Now, before NVIDIA comes up, I don't know if we'll have any really good news on NVIDIA. I mean, any good news until NVIDIA. We don't have any. The Empire State Manufacturing Survey was good today. Actually, dude, its numbers are so fake. Did you see that? Did you see that report? It was like, it's such a big. It's like a 17 sigma miss, dude. It's just not this is not even anywhere close to being.
Yeah.
like,
Well, and that's I think you're going to see a lot of bogus numbers anyway. So
yeah. Let me show you what I'm talking about, folks. You want to see something that's pretty crazy? So the Empire State Manufacturing Survey, the forecast for it, right? This is like activity in the Empire State, New York.
right.
Forecast was 5.5. It was 18.7 actual in November. So that's over a 3 sigma miss. It's like a 4 sigma miss almost, which statistically is impossible, but that's why numbers are such BS. So besides that, there is no economic. The Fed was talking today. Kashkari spoke at 1. And Waller speaking at 3:30, closing out the day strong. probably sell off harder. I think Waller he pretty much hews to the consensus on the Fed stuff. Tomorrow, industrial production, home builder confidence, that could be something. We have another Fed governor talking. Wednesday,
Well, we had construction spending this morning that actually came out pretty decent. I mean, I don't know if you saw that or not.
I didn't see that. Was that good? Oh, it said delayed report. It actually didn't post it on MarketWatch.
Oh, well, I was just looking on investing.com and it came in at 0.2%, and they were expecting negative 0.2%.
Oh, no, you're right. I see it here. It was just in another line. Okay, yeah.
Which the market didn't care. So
right. I don't even know what DHI or anybody Leonard's doing.
Yeah.
They're selling off. So this is the thing. So look, volatility is increasing, right? Now, Japanese bonds, right, are going to go up. Actually, the yen is down today, which is interesting. The bonds are going to be
going down, right?
It has been going down.
Yeah.
There's a lot of stuff happening. Like Japan's about to embark on quantitative easing. We're doing the $2,000 stimulus checks, I think. I don't know what the status. I think we're doing that. I don't think that anybody can stop them from doing that. But Canada is about to go quantitative easing. Europe's about to kind of start doing some quantitative easing. So the question is, are we heading? Are we doing a deflationary pivot, right? Because all this stuff ostensibly would create. And I was going through a lot. I was actually doing some deep research. I'm kind of being scrambled here today because I was doing this thing about. So Stephen Mirren is probably going to be the next Fed chairman, I think, or is it going to be Hassett? One of those two, probably. But I was doing some like a deep dive into like what Stephen Mirren has been talking about, and what's really interesting is actually what he's been advocating for. And this is why I think he might be the Fed Reserve, the new Fed chairman, come 2026 when Jay Powell steps down. Is he's basically been arguing, and I'm not completely going to articulate this perfectly, but basically he's argued that the way the Fed does anything is so outdated based on a neoliberal world order that doesn't exist or is rapidly ceasing to exist. And so that means 2% inflation targets, an independent Fed. These are all sort of artifacts of a bygone era. So his thing, I don't know if anybody's heard about the Mar-a-Lago Accords, but it's basically a reimagining of the relationship between the Treasury, the private sector, and the Federal Reserve. And it's pretty interesting. Maybe I'll do a short little video deck on this, but the Federal Reserve is ostensibly supposed to be a distinct and separate and independent entity, right? But a lot of the stuff they've done since 2008, it's actually made them. Their measures have made the Treasury, and you saw this a lot with Yellen and the Biden era, right? It's made the Treasury have to step in basically to backstop the financial sector a lot more than in the past. And so basically the Treasury and the Federal Reserve, they're not independent of each other anymore, which was the point, which was kind of always the point of the Federal Reserve, to be an independent bank. Stephen Mirren says, actually, that's just how it is, right? So it's like basically a coordination of the Treasury and the Federal Reserve, because the financialization of the economy has gone such that they can't operate independently of each other. Two, sort of more government intervention in the free market. So we've seen this with the mineral companies, LAC, MP, Intel. But Murin is actually arguing for that as a way to compete against China and sort of reinvigorate the American manufacturing sector. And then the third part is that inflation target. And if you think about if AI is real and it creates this massive singularity style event of just hyper accelerating productivity gains, right? Because it's not only does it not like it's not like a cotton gin or a steam engine where it creates productivity gains, but it creates, I mean, it is sort of like it in that they also create faster productivity gains. So it's like logarithmic productivity gains from improving upon itself. But if AI really is not a bubble, and if it's true, it's just going to cause continuous exponential productivity growth, which in that case, you don't really need, if you're growing so much, you wouldn't need a really low inflation target, right? Because you can grow your way out of inflation. You don't need to be beholden to that. Actually, trying to keep rates too high will slow down the economic growth. So you want to lower them, and yeah, inflation might be higher, but the productivity growth will be such that it won't matter. Anyways, that's I'm probably not getting every point exactly right. That was the thesis of the Mar-a-Lago Accord. You can go and look at it. I mean, it's all public. This is all basically part and parcel of what Bessent and Trump are doing. It's pretty interesting.
Well, one question I've got was kind of thinking about this a little bit was those $2,000 checks you were just talking about. So is it really coming out of the Treasury? I mean, the question I have is if we're bringing in trillions of dollars from all these tariffs, right? So this is actually money coming in from other countries, and he's just spreading it out into the country. So it's not the same as like a stimulus check, right?
Well,
that's what I'm trying to figure out.
Well, dude, honestly, here's the thing, guys, is those checks we all got during COVID, or you got them maybe, I think everybody got them. I don't remember if I got one or not. I don't really, but they said that caused that wasn't what caused inflation. Like the $1,000 they sent or whatever to people, like it might have had some minutia effect, but like it was really just the printing of the Fed. They printed like 25% of all dollars ever in existence in a year or something like that. So I don't know if those $2,000 checks, like no matter where they're coming from, I don't know if it's really going to matter.
Right. I understand that. I get that point. But I was just trying to think, this isn't this exact same thing as them just printing money and sending it out. Apparently, in theory, they've brought the money in and they're just redistributing it, kind of thing.
That's a good point. That's it. Yeah. So I guess it would kind of be a net nothing, right?
Right. Exactly. Yeah. So even though they could use it and pay down the debt, I mean, I'm not going to say they shouldn't do that. But,
yeah.
But at least they're not printing it up and then sending it out like everything else that they've done over the past 10, 15 years.
What's a little bit of debt among countrymen, right?
That's right.
What's a couple extra trillions?
Yeah, no kidding.
It's all fake anyways.
Yeah, it's all electronic money. So
yeah. So that's like kind of just, I don't know. I don't really talk about macro that much, but it is interesting to me. I like listening to it. And I don't know. The thing with macro is like nobody knows. Like these are negotiations that are happening with like heads of state and stuff. So it's all backroom stuff. It's very opaque. JP Morgan, right? At the dinner that Trump had with JP Morgan and all the banking CEOs last week. So I will say though, this is all Stephen Murin, he is in the running at least to be the next Fed chairman. I know like someone said Hassett is the other one. We'll see, but I do think that the administration at least is kind of buying what Murin's putting down, and it was honestly a very interesting article. So I recommend if you're interested in macro stuff, go and read it because it is pretty cool.
Yeah, definitely.
So now all that being said, what to trade. Man, to be honest, I have gotten a lot of fake outs this last week, like a lot of fake outs. And it is just wild, man. It's wild to watch. And I saw some NVO calls on the scanner. I don't know where they went. They were definitely here though. I don't know why they disappeared. Anyways, I don't know what I mean. SLV is again just weird gaps. GLD weird gaps. That's all just weird. Everything's weird. What do you think, Jeff? What do you like? What's like? So I mean, still.
Well, I drove my wife nuts this weekend. How's that? Trying to figure out, basically what the heck the market's looking at, what it's trying to do. And, there's really nothing out there to say, hey, let's go down, but there's nothing out there to say, hey, let's go up either.
No.
And I think the market is, on a frustrated side of things. And the only thing that you read now is, well, AI, boom is over and they're getting out of AI stuff. And that's why the markets are down. Well, that's not going to drive everything.
No.
So that's the one thing that you really can't, put a finger on right this second is, what should be down and what should be up. And I think you're right. The markets have gotten really weird. And of course, we still haven't gotten any, economic news, so to speak. So I think the market is, trying to, it's kind of halfway starved from that. And as long as they don't have that, my guess, there's no enthusiasm in this market, and therefore it goes down. So, really, if you think about it, uncertainty, volatility goes up with uncertainty. Therefore, markets are probably going to be going down with uncertainty. So I always kind of step back and think, well, okay, fine. And when I looked this morning, I saw this line of Fed guys speaking. I was just like, oh, great. There's our economic news.
Yeah.
And so everybody's got their opinions, but the market's run by humans and traders that are out there. But and really, if you look at where the S&P is right now here at 6678, it's down a little bit, but it's not bad. It's off of its highs. We made a new all-time high literally Wednesday of last week. So
yeah. But it is helpful to pull out. Also, hey folks, exit DJT at 26 cents for like a 30% gain. We'll just take finally got a direction right on this one. If you're in free ride scanner, 30% gain on DJT. Good job. That was a nice little quick one. Screw you, Donald, for not giving. We need you to come and tell us that stocks buy the dip or something. So take that. But
so are the banks doing bad?
Yeah, dude. At least they were this morning. Yeah.
Oh yeah, they're still doing bad. Yeah.
JPM. So like all of this stuff is rolling off, ladies and gentlemen. And like if you look at Meta, holy moly, right?
Yeah.
It's it's crazy. These are the leaders of the whole, even Apple. I haven't taken an Apple trade. Anybody in Cash Flow Club? We have not taken an Apple trade in like 2 weeks. One, they had earnings that we don't usually do it on earnings. But last week, I just was like not looking. I was seeing the price action on this, and I was just like, because this is what I feel like Apple should be doing. But I felt like it didn't come last week. We could have taken a trade, but I just want to sit out because I was like, I don't want to give you guys a losing money trade I'm not 100% confident in. And it's just like everything's rolling over, right? Everything's rolling over. Again, let's not be panic hands. Good job, Sean. Let's not be panic hands. Like this is just a small blip, honestly, in this huge run up this year. So it's actually not that bad. But I will say it is like we're used to seeing Qubit soar 20% in a day. We're used to seeing Archer, like just Joby, all these crappy Oklos go up, So it's not bad to have cash. It's also not bad to focus on these big red days, like what's working. And it seems to be the pharmaceutical companies right now. I don't know Cat. I don't know how's Cat doing. These defensive, they're not doing great either on days like this. And neither is Home Depot.
And they got earnings coming out.
They do have earnings tomorrow or tonight. What is
tomorrow?
it? No, tonight. Oh yeah, tomorrow morning. Yep.
Yeah.
So like, so yeah, so when volatility, and this is what's really getting people is the volatility, right? This volatility is high, so this makes trading harder. It makes trading a lot harder. This is great for selling premium. Now there's a double-edged sword with selling premium though in volatility environments is that it's volatile. So the trendy stocks, like not just like trendy like Beyond Meat or something, but trendy like on a technical analysis perspective, trendy stocks, it's harder to keep a trend because volatility is high. They can go up, they can go down. So it's just like basically on Wednesday, if we do take credit spreads and nothing has changed, but then again, Wednesday's going to be a tough day because Nvidia has earnings after hours, right? That's Wednesday, I think. Yes, on the 19th. So it's going to be tough.
Well, that's one thing that I do when I see volatility increase like we have over the past little while here is I always go out about 4 or 5 weeks and go about $100 out of the money on SPY puts and just buy a bunch of them. And that's my insurance. I mean, you can get them pretty cheap. I mean, you can get them for 60, 70, 80 cents. But heck, if they go up to $2 or $3, you've made a bunch.
Yeah.
So, and I just use it for insurance more than anything. And I mean, they're paying pretty well today. I was getting kind of hammered on them, but now all of a sudden they're doing good again. So
how far out do you go?
I go about 4 or 5 weeks.
Yeah.
And that's just to stay out of the time decay more than anything.
Right.
And I mean, that way I can sit there and see what happens over a couple of weeks. And you don't have a whole lot at risk. I mean, you're paying those 65, 70 cents for all these puts, and you got $300 or $400 in them, but they can turn into a whole bunch if you get one of those big, huge down days. And that's really why I do it.
Yeah, so, it's great, and that's a good point. Actually, I was thinking about this morning. I think if VIX continues to remain elevated, we're going to be hunting on the free ride scanner. Like we have a lot of December 19th. We have some November 28th positions open. But we're probably I'm going to be hunting for longer dated options. I know like 2 weeks is my sweet spot, but I'm looking out maybe a month if volatility remains elevated, because that gives us more leeway for things to be volatile, right? If we take a Friday expiration and the volatility is just crazy and like, it just doesn't give it, it goes down a lot one day, we don't have time for it to recover. But if it goes down, if we take it farther out, a month out, it gives us a little bit of time to recover, even if the volatility waves send the stock up and down and up and down and up and down, So, like these, like December 19th, January 16th, that's maybe a little too far, but this is the kind of stuff we're going to start hunting for if volatility remains elevated, which I don't know. I mean, how we go back to 2024 and it was pretty elevated for the entire year, at least for the second half. So it can stay kind of high for a while. So longer dated options, and then be more choosy with your entries and stuff, because it can get, the whipsaw can get you if you're playing the shorter term ones.
Right.
Don't get caught in the whipsaw. Well, Elizabeth, it will be reflected in the scanner just via the contracts that are being traded. So like, I'm just going to filter them. So like, just filter them out. So if you see, unless you have a really, I mean, I'm not saying we won't take like weeklies, but I'm just saying that if volatility remains elevated, I'm going to just be looking, if I send out trades or I enter a trade, I'm going to be looking for like a December expiration. Or at this point, maybe like a late last week, November 28th or something, next week. Even that's, 2 weeks. But weeklies are getting a little dicey, with high volatility. Even the DJT we just took, that was a longer dated option. It was December 19th, wasn't it?
Mm-hmm.
So, yeah. And not only that, I'm trying to think if this is true, which I think it is that because volatility is higher, even with longer dated options, the idea is you're going to get more of a move faster. So you can actually kind of, so even though you're giving up a little bit of that delta sensitivity, right? From the shorter dated options, you're actually getting, it might even out versus like a low when we were back here in like a suppressed volatility regime under 15 for so long, right? We could take basically giving us the longer timeline, it gives us about the same delta as like as the shorter dated one would have. Then I think that's true. I'm going to make sure I'm not just talking out of my backside there. Yeah. But it makes logical sense to me. So yeah. I think it might be true. But don't go quoting that to Kane in case I'm wrong and he thinks I'm just Kane's so technical, he knows so much. Anyways, so what to trade? With all that being said, what do we trade? So NVO has, look, this is why I'm still like, NVO still has a ton of stuff coming on. We got some more calls coming here right now. And then we did have, I don't know where it went, man. I promise you folks that I saw something on NVO on the sweep scanner. It was like $8 million worth of stuff. So I think NVO is going to be a good trade for us. We probably could have entered it later, but that's okay. Oh, hey, what was that? What was that ticker I said had a ton of puts last week on Friday? I dropped it in our chat. It was an oil ETF.
And Friday? I was not in on Friday. I was exiled.
CoreWeave.
XOP.
XOP.
Let's see. XOP had a ton of stuff. Wow, that would have been good.
Well, XOP had a rally on Friday. I know because I was short a put spread on it.
Yeah. Did you weekly expiration?
It went to zero, so I was good.
Yeah. Well, so there was so many XOP puts coming in. I was like, should I do it? And I wish I had because we sold off hard today.
Yeah. I was actually trying to get into VLO this morning if it stayed above 183 and it wouldn't do it. It just died off.
Oh yeah. Yeah. So, anyways, anybody have any questions about anything I said? Probably not.
Bob, XLE, I am not a fan. There, I'll just say it that way. So I think XOP is a lot better ETF on oil than XLE. XLE is flaky. I don't like it. I've traded a million times and I still think it's really flaky. But the XOP is a whole lot better in my opinion. So I would use that one.
Mm-hmm. Yeah. We're in Elizabeth. NVO, I know. So NVO closed the gap earlier today. So this gap down actually closed it. We still have more calls coming in. Again, look, I don't know if you're here, but I feel like it's a laggard. All J&J, Lilly, AZN, AstraZeneca, they're all up. I think NVO is going to go up as well.
And we have next week's 25 call on that? Where is it?
We have 28. I think it's the 28th.
It's the 28th of November, 59 calls. There it is. Okay.
Yeah. So like that's again, it's good. I think we're good on that one.
Yeah.
And one other thing I wanted to just talk about here is dude, so CDE. So very strange stuff on CDE. CDE is another one. Again, we took December 19th. Look at all this volume on Cure, whatever. I don't know how to say it. Some French word. You know the company Cure Mining? Jeff?
Is that CDE?
Yeah, CDE. Capital Delta Extra.
Yeah. So Cure Mining.
Cure
Mining. I've seen that come up. I haven't ever traded it though.
Yeah. So again, it's going to be a swing trade, but I mean, it's in a massive amount of volume on there, and there is nothing. There is nothing on the other side. In A, basically all the way down. And I'm not talking about the 19th expiration. I'm talking about basically like November has a little more put activity, but December 19th. So I don't know. I don't know what Cure Mining does, but it's a gold miner, I think.
Let's see what they do. Gold and silver producers in the United States, Canada, and Mexico.
Interesting. Wait, and where? Canada, Mexico, and where else?
Canada, United States, and Mexico.
Okay. So I don't know. Interesting. You know, because
And they're
actually,
based out of Chicago.
oh, interesting.
So what's the French name being in Chicago?
I don't know. It should be like Polish or something.
Yeah, exactly.
Okay. So let me just end this little diatribe I've done. Then we'll find some trades or try to find some trades. If volatility is over 20, be cautious on puts. You need to be be cautious on calls. Cautious calls when VIX is over 20. So, and again, not to say you can't make a call. You can't make a call trade. It's going to be harder. It's going to be more likely a higher percentage. And I made this mistake with Google today because Google, Berkshire Hathaway announced a big thing. And then we were briefly up 20%, didn't go our way. So this is more, it's to myself, but it's also to you. Just when VIX is this high, just try. You want to probably focus on longer dated puts. So a month out puts, it's probably going to be a little better for you. Higher percentage trade ideas than going for like weekly calls, because it's just you're really running into the risk of a buzzsaw of reversion. So
does the old adage still work? When the VIX is high, it's time to buy. When the VIX is low, it's time to go.
Does it? I don't know. Does it? Because like VIX was low and everything was going up.
Yeah, I understand.
So
that's why I just brought that up. I was just like,
yeah.
Hey, I remember them saying that a long time ago.
Yeah. I don't know. It's I don't know. It sounds like some I don't know if I don't know. What do you think?
Well, I don't.
Is it still true? What do you think?
Well, I don't go by market rules of thumb ever, because they always end up lying. So I just was remembering that old saying, and I was just like, well, the VIX is going up and we're down, so it might be a good spot to try to buy it, but I'm not going to buy a fallen knife by any means.
Yeah, and you shouldn't, right? And
right.
It's like and ostensibly the VIX will fall again.
Right.
Though I'm not really sure what will cause it to fall.
Right.
But I'm not really sure what caused it to fall in the summer either. So it's interesting. This is an interesting market. I do think we're entering, at least temporarily, a briefly different regime than what we had from May to early October. Again, you can't discount the rollover here. This is actually what do we have? Back in early October, we closed below from basically 1, 2, 3, 4. We closed below the 20 4 times, basically in a week period. We closed below 1, 2, 3, 4, 5, 6, 7, 8. We closed below about 1, 2, 3, 4, 5 over the last 8 days. So that means nothing, but it's just an interesting little thing to observe. It's like we are. Like what's going to cause it to go? I feel like just intuitively we have more stuff that's going to push it far, maybe down to here, than back up to here. But maybe Nvidia, is amazing again, and everything is like, okay, well, we're just going to build our AI robot gods, and everything's good. Buy the dip. Who knows, man? What are you looking at today though? Like was anything stick out, Jeff?
I have placed orders today, and not one of them has gotten filled. How's that?
Damn. Really?
So, I have tried to get into several things, and every time I've been using buy stop or short sell stop or whatever it is, and nothing has been wanting to fill me on anything. When I see that, then I just kind of step back and go, okay, market hates me today, so I'm not going to do anything. And it didn't cost me any money doing it. So, but yeah, that's what I've been kind of, looking at today, thinking, why is this up? Why is this down? And I just been spending more time doing research, just like Pro, typed in here, what's coffee futures like? And the big thing on that is just tariffs on this, especially on the Brazilian coffee.
Yeah, you want to go ahead and share your screen there on the coffee tariffs? Because I'm curious about that. As an avid coffee drinker, I will say. Yeah,
I mean, this is where is it? There we go. That's actually bar chart. Where's my? There it is. Okay. Always lose my screen thing.
Yeah. Go ahead. Just take your time. I'm just going to keep on talking while you do that. I'll just blabber for a little while. Look, so okay. So this is another reason. If we're selling off CVS, this is why another thing I'm okay with. I think CVS is going to play out for us. CVS, Novo, Pharma, Dollar General. These companies are pretty good rotational plays, I would say. The healthcare doesn't go down, or it does go down, but it's always going to be there. It's a good safe haven. Look at Pepsi today. Even I don't know. Is your chart pulled up? I'll stop talking.
No. This is just a chart of coffee here. You can see it's kind of popped up and everything like that, but way back over in here. If you kind of scrunch this up a little bit, there we go. So they had a nice little rally in May here, and that was just basically based off productions and blight and all this good stuff. Then of course they started getting into production here and doing actually quite well, but then tariffs really came in and they kind of popped everything back up. Cocoa's the exact same way. Just with the tariffs that are out there, it's buoyed the price of everything. Mm-hmm. And even though we might have a shortage of cocoa, because I always call it the armpit of Africa, is probably a wrong thing to call it, but anyway, but right there is where the Ivory Coast is, and that's where basically 75% of all cocoa is grown, is in that area right there. And they've had horrible droughts. And so that's driven up the price of cocoa, and actually made it quite scarce for a little while. And coffee, though it's grown basically all over the world, and you have to be within a certain distance of the equator to grow coffee. Let me just put it that way.
Right.
Anyway, so with that, I mean, coffee has been very, very strong and will remain strong. And if you look at, how much coffee is at, Starbucks or whatever it is, it's outrageous. And it's just because the price of coffee is up so much. It's usually sitting right around $1, $50, $70, $80, $25, below $2. And here we are at, $3.76. So I think we're going to continue to see coffee stay up. One thing, if you're wanting to trade the actual contract, you're controlling basically 37,500 pounds of green coffee beans, if you want to know. But if it does break back below that 350 area, my guess is going to start probably correcting back, and maybe come back down to $3. But I mean, it's you got to have a tough skin and heavy heart when it comes to trading coffee. Cocoa is easier to trade, in my opinion, but I've traded a lot of coffee in my life. But ever since the ice came out and they didn't want anybody really trading their stuff, they raised their exchange fees just to get a quote up to $140 a year, which is ridiculous. They own the London International Financial Futures Exchange, and they own the New York Stock Exchange. The ICE does. So they've grown a lot, but I don't know why off the CBOT, NYBOT, the New York Board of Trade, they charge so much for those quotes and everything like that. So I protested them, and I don't do that. And the one thing I really hate about that is they have the dollar index, and I love trading the dollar index. The dollar index is a lot of fun to trade. But coffee and cocoa, cocoa was the best in the world to trade. And the only reason why is that you could actually do a lot of options on the cocoa market. That's what I really.
Cocoa options, that'd be sick.
Yeah, you can do a lot of options on that, and you get paid really well. But I would do it sometimes with just iron condors, or you can just do call spreads, put spreads, all kinds of stuff. And it was a lot of fun trading the cocoa market. But then they started just jacking the prices up, and then they made the commissions outrageous also. And I'm just like, okay, Folgers can trade all this and nobody else can.
Yeah.
So, but yeah, that's really the big thing. And it is kind of a volatile market, and it gaps around a lot. So watch out for that. And you can get limit up, you can get limit down, and all that kind of stuff. So just beware, just depending on what weather does and everything. And that's coffee, if you want to talk about coffee. So one thing I think was really weird, if you look at soybeans, I mean, you talk about volatility. Look at this thing. So F. How did cat get in there? Hold on.
Yeah, that's right, buddy. We're gonna need semi-checks to afford our daily coffee habit.
So this is the daily chart of soybeans. You can see they've been really jumping up here. This is off of the China talks, all right? And then China came in and they bought some soybeans from us, which they hadn't bought any this whole year. Mm-hmm. And so they've shot up soybeans. But if you look at what they did Friday, they were up here. They dumped soybeans Friday.
Oh, yeah, look at that.
Hammered them. And I don't know what this news right here was. What was weird is that's usually the time that they put out world ag supply and crop production and stuff like that. And there was no news coming out of the FDA the USDA. So I don't know what was going on. And I was trying to figure it out. Then I came in this morning. I was thinking, okay, well, let's see if soybeans are going to bust below $11. And all of a sudden they just take this thing off. And this gap you see right here, they actually halt the market at 8:45, and they reopen it up at 9:30. And so that was the actual gap this morning between that 45-minute window. And then they just took it up from there. And it sounds like, well, China's going to buy more soybeans now. So, but that's what that market's getting yanked around by is trade talks. So you got to watch trade talks. And what the USDA and Trump are doing, and that's what's whipping that thing around. And then wheat's the same way, corn's the same way. So, yeah, even corn and wheat got hammered Friday, and they're all up today. So, if you want to know something what's up, just the grade.
Yeah, and of course, Besant teasing like a trade deal with China.
Yeah,
by Thanksgiving. Did we say that? Someone said it. It's probably
Besant said we're going to have this nice, cool trade deal by Thanksgiving.
It's crazy how you can figure it all out in like 2 weeks.
Yeah. And the thing is they've actually now got more orders on our soybeans for next year from China. So just because the season's over down in Brazil. Mm-hmm. And so they're winding up their crop season. So now they're going to be starting looking to us to get those beans, I guess. So I don't know how that's going to work out. I don't know.
Yeah, I don't know. I don't know, man. I mean,
it's just you're a cat on a wire.
Yeah.
And in the markets these days, and you can be right one day, you can be wrong the next. So, and that's why I like, the shorter term trading stuff a lot of times, day trading and everything like that, because you can get a trend inside of one day. And then the next day, it might be a totally different dog. And that's the one thing you really have to be careful of, especially when volatility is like this. I mean, the S&P can be down 70 points today and up 120 points tomorrow and down 60 points the next day. And then you just don't know what they're looking at for that day. Or you're not fast enough. I'll put it that way. So.
Exactly. Yeah. I mean, ES futures. So, I mean, the futures, you can always, last night.
That's exactly right, Bodie.
Count on wire the kid. Yeah, dude, I know. There was just crazy whipsaw action in futures last night too. I was watching it. It was like, it was
nuts. I mean, I was looking at it going, what in the world are they doing?
Yeah. John is asking, when we have red days like this where just about everything is selling off, is there any sectors to recover first before others? Well, it's helpful to look at the stocks that are going up right now when everything's selling off.
Yes. I was going to say, if you look at your strongest stocks that are down, they'd be the ones that'd be the first ones to start popping up if we go back up.
Yeah. So what, you saying Meta? Meta's is setting up for a pop?
I would think if we turn this market back around, I would think Meta or Google or those guys would probably do pretty well. I mean, right now, this time of year, I'm a little leery of Amazon trading just because everybody's going to start shopping for Christmas, and all depends on how they do for that, because everybody shops on Amazon, right?
Yeah.
So that's the thing. I get a little leery this time of year on Amazon just because just a little hiccup. They'll come out and go, well, we're not selling as much as we did last year. Man, they'll tank that thing.
Yeah.
And you're like, dang it. I just bought calls yesterday.
Yeah.
And so that's why I'm kind of leery of it. And even, Alex was saying, Berkshire come out and said, hey, we're going to be buying up from Google, and it popped up. We've just been pulling back ever since.
It has. Yeah, we unfortunately got into that pop up. But yeah, what a fake. That's what I'm saying, these fake outs. Hey, Blake, will you share my screen? So look at Meta.
Even if you look at like Tesla today, did you see Tesla? Tesla had a nice pop up today, and now they're hammering it.
Yeah, look at that. Just huge wicks, man.
Yeah.
Like they do not, I don't know, like people just.
Tesla
Meta's down 25% though. Everybody's 26% basically.
Ooh.
Isn't that crazy? 26% Meta's sold off from its all-time.
Wow. I didn't know it was down that much.
Me neither. So like a reversion trade, maybe on Thursday. Let's see what happens this week. But like on Thursday, we played that Microsoft gap. We played a couple of gaps on those long-term debit spreads. We'll see if we can do like a long-term Meta spread. We're just basically trying to fill the gap. So we'll be taking an out-of-the-money debit at 680 or something, or maybe even higher, cheaper, 700, 705. So what's going to be interesting to trade, and I'm very hyped to trade Netflix now. Ton of options volume. The 10 for 1 split. We were talking about if it was a 10 for 1 or a 15 for 1 last. It's actually a 10 for 1.
It is. I thought it was 15.
No, it's 10 for 1.
It's 10 for 1. Okay.
Yeah. So go ahead. If you were like, man, Netflix is so expensive. Well, if you go look at the options chain now, instead of like $1,000, they're like normal options prices, which is really cool because you can trade it more. So it's like $1.80 for 5th of December. This week, weeklies you can get in for like 78 cents depending on how far out. You're sub $1 now, which is great.
Yep.
No, but nothing on Netflix today. We're gonna sit out of the of that stuff. To be honest, I don't really have any. What's on your scanner? Any stocks on your breakout scanner?
Actually, Google is one of them. Pharmaceutical Ions is on there, and SanDisk.
SNDK is still winning.
Oh, I know. And Friday, Western Digital showed up a lot too. So
what's the ticker?
WDC.
It's pretty good. Still solid trend.
Yeah.
Honestly.
Yeah, and the only news behind those two, Western Digital and SanDisk, is right now in computers, they have a lot of solid state drives.
Yeah.
And those two are the two manufacturers of the good old hard drive, with the disk in them and stuff.
Yeah.
Well, they found with these big humongoid data centers and all the data they're gathering, those solid state drives can't hold the data. And they're going back to huge hard drives on just the disk drives. So there's a huge demand on those disk drives again. So Western Digital and SanDisk have been moving up off that.
Well, that's interesting. Who would have thought that?
Yeah. Well, and it's not just, they're talking about terabytes of data. It's huge amounts. And I don't know what the word is above tera, like meta.
Yeah, I don't know what's after terabyte. Let's see.
Yeah. Peta. There you go.
Petabyte. Okay.
Petabyte. Thank you, Bodine. I knew he would know.
Yeah, I know.
So-
Nadine's like, but I don't even know why I Googled it. Just ask Nadine.
But yeah, but they're actually making petabyte drives as well. That was the one after terabyte.
Well, that's pretty sick.
Yeah, they're huge.
I don't even know. Yeah, my PlayStation has a couple. I don't even know I guess it has like 4 terabytes.
Yeah,
Petabytes, what, 1,000?
1,000 terabytes.
Yeah.
Or yeah, right.
Yeah. Yeah, it goes petabyte, exabyte, zettabyte, and yottabyte.
Ooh, Yoda.
Yottabyte. That's right. So no trades today. Honestly, unless Jeff has something he wants to throw out there, I don't have anything.
I don't. I mean,
I
like
don't.
I said, I couldn't get filled on anything today, so I'm just like, well, I mean, if you found something, I'd be going, yeah, let's do that. But if you haven't found anything, I mean,
I have nothing with conviction, dude. I'm like gold, and so even open, like we still have an open position open actually, but we have look at just everybody pull up the free ride scanner if you have it. You can also just look on my screen, but massive volume on open to every side. I don't even know, a lot more puts for sure. I mean, a lot of puts honestly for this week, but nothing to sneeze at on the call side either. I don't know what the ratio is on open. Let's look. I mean, yeah, it's kind of just like, I don't know, man.
yeah.
So I have no conviction on anything today except DJT because I was mad at him for not giving us like I need the Trump stop loss to come in so we can just go back and get over this little market volatility we have here. But yeah, even GLD, SLV are just looking weird. Like, look at GLD, man. It's below the moving averages again. I don't even know how much that matters for GLD. I got to be honest. I don't think moving averages are even that indicative for SLV or GLD, but it's just they're below it again. And SLV is still above it, but it's doing some crazy weird gaps. And you would think that it would be going up.
Right.
So, yeah.
I mean, the markets are weird.
They are weird, man. They are weird. All that being said, we did get a winner on DJT today, which is, well, happy about that. And what Jeff was saying, and what we've been talking about is, especially in higher volatility regimes, we just don't know like what's going to happen tomorrow. Even I don't know what's going to happen tomorrow, honestly. To be honest, like, I was surprised that the markets were going down today, even though I said I thought they would. I still kind of thought I would be wrong because we've just been in such a buy the dip regime. So I think I gave people like some hopefully some actionable advice and stuff that I'm implementing in my own trading as well, like for what to do now, in terms of longer dating the options and playing a little tighter on your trades. If you're less likely to get a runner in high vol regimes. So if you're up like 10%, it might not look great, but guess what? 10% win is 8% winner is a lot better than a 2% winner is a lot better.
2% would be awesome.
Yeah, 2% winner is a lot better than trying to get to whatever double digits and then seeing it reverse.
Yeah.
So playing the short term stuff. Frankly, that's where my free ride scanner shines. It's what we do. And so that DJT trade that I talked about. I think some of you guys got it. I'm going to tell you a little more about that today. So before we get into that, we develop tools and strategies to the best of our ability. No one can guarantee the future. There's always going to be a risk of loss when trading. And, past performance, not indicative of future results. So all these examples you're going to see are from live trades from July through, now actually 85.7% win rate average, 43% winner, 26% average net return winners and losers, 1 day average hold time, There's been bigger winners, smaller winners, and there were losers. So trade at your own risk and see our terms on the homepage for more information. And what we're going to be talking today, a lot of free ride stuff. This has nothing to do. There's a technical term called free riding withholding. Nothing to do with that. This is just the best way to describe the phenomenon. And just to reiterate this and drill it into all of our heads, there's going to be losers. Unfortunately, there is no black box miracle system that prints out winning trades automatically. So the whole purpose of our research and work with you all is to give people an edge in the market. So if you can't handle a losing trade, shouldn't be trading with real money. Lost in trading have occurred and will occur in the future. Now, if you don't know me, who's this guy that's been talking for an hour at this point? My name is Alex, and I want to ask you a question here. I'm going to start this out with a couple questions. So what if you could throw out all your charts, click erase on all those colorful drawings, and never worry about a trend, financial statement, or technical analysis ever again? So what if you could ignore all of it and still have the opportunity to turn dirt cheap options contracts into what could be massive paydays, like this 100% winner on Lulu with options that only cost 68 cents to enter, or a 134% payout on Qubit starting with just 73 cents per contract, and even a 156% return on Oklo starting with just $1.58 a pop. So I know that might sound crazy, maybe even too good to be true, but as you will soon see, those returns aren't even that special. They're definitely not out of the ordinary. In fact, I have seen dozens of opportunities just like those every single day, thanks to a custom coded option scanner that detects which contracts could be primed to make a double or triple digit move, not in a month, not in a week, but in a matter of hours. And the way it works is quite simple. All we do is wait for the option details to pop up in the feed. And if we like what we see, we can click a few buttons on our brokerage to follow along, knowing we have the chance to walk away with what could be a double or triple digit payday only hours later. For example, look at what happened on AMD. On July 29th at 10:21 a.m., AMD started lighting up the scanner, meaning these exact options could have the potential to pay double or triple digits in a matter of hours. So anyone who took the trade, like I personally did, could have walked away with a 52.7% payout on the basic call options by 10:44 a.m., which is a double-digit return in only 23 minutes. That would have been no different than watching $1,000 turn into over $1,500 before your favorite TV show ended, or $2,500 into $3,818 before the morning cup of coffee got cold. You see, while most people try to make their trading as complex as possible, I just wait for a trade to pop up on my scanner, and then I buy the exact options contract to tag along for what could be the next double or triple digit winner, usually paying out in less than 24 hours. For example, like on July 29th, when it pinged FFAI, a 23.8% return in 2 market hours, or the next day, July 30th, when it pinged on IonQ, a 19% return by 10:04 a.m., and then again on July 30th, that same day, it flagged NVIDIA, 111% ROI within 24 hours, or August 4th, it was all over American Eagle, 24% return, this time in just 45 minutes. Or how about August 6th, when it lit up Etsy, 120% payout overnight. Now,